Good morning, everybody. Welcome to the morning call on this Friday morning. I'm Laz filling in for Scott today, who is out. Well, what do we have? We have a market that has really, in the last 2 weeks, bounced back very aggressively, very fast. After making new price lows, just it seems like 8 to 10 days ago, we were sitting at new lows in the S&Ps, trading down to around 1100. We have rather aggressively snapped back as this market has been nothing short of utter chaos the last 7, 8 weeks, and we can take a look at that. Now sitting at the high end of a range, looking like it wants to go higher, but I guess the important thing to note here is the status quo here in the market is not to be status quo. So let's take a look. We were just, like I said, at new price lows, about 10 days ago here in the market. And once we hit that new low, that's probably where a lot of new shorts put to work. A bunch of shorts got trapped down here at new lows. Market chasers trying to sell the market. And the market then, again, eats you up and can spit you out if you're chasing price. In a matter of, 10 trading days, we're right back up here, just barely above this prior price high that we saw back in late August. So what's interesting? What do we do here? Well, we have, about a week or so of consolidation after a nice 6-day run. That 6-day run put us back into the higher end of the range. And now you have a multi-day consolidation. You can see how price over the last week or so has basically just overlapped each other every single day. You are seeing definitely a consolidation here. What's interesting about the consolidation, the thing I want to point out that I think is most valuable, is this black line, which is the 200-day EMA. And you can see before we broke, that 200 EMA acted as a good barometer of support in the market. It held for about a 2-week period. It kind of hovered around this 200 EMA. Buyers stepped in, and then ultimately, once it sliced through that 200 EMA in early August, you can see what that resulted in. So we're pretty aware of the significance here in the market of that 200 EMA, which was also coincidentally that spike high that we saw 2 days ago on the news out of Europe, where the market really aggressively traded higher in a 30-minute window, ran right into that 200-day EMA, and we can take a look at that on a smaller time frame, and then 2 days later traded back down. So again, not much to report here as we are in consolidation. I think a lot of traders here are on sort of breakout alert. Are we going to break out and go higher? I think some traders are trying to use this 200 EMA as a barometer of resistance to position themselves for a potential pullback into this large move. It's hard to say right now. I think it's really a very tough trade for anything more than just a day or two. Trying to put capital to work, and I've spoken to a lot of people out there on the street, money managers, smaller hedge funds, those types of institutional, larger players, and they're all having problems right now. They all want to put money to work, and they can't seem to make it work for more than a few days at a time, as this market has been treacherous. And I think the best way to look at this market is on the weekly time frame. Again, let's go back to the chart. Look at that S&P over the last couple of weeks, and you can see each weekly bar, more or less overlapping each other. We're not really seeing any follow through to any one particular move. Snapping back here on the weekly into a declining 21. Again, there's going to be some resistance here. This is not a trending market right now. In order for this to be a trending market, it's going to have to develop. It's going to have to consolidate here and then start to turn higher over time. Trends don't happen in 6 days, and you shouldn't position yourself accordingly as if we're in some new trending market. Let the market really tell us or speak to us about a trend, and then we can find a way to position if you are someone who's looking to put money to work for longer periods of time. Right now, it is a day trader, short-term trader friendly environment. You're getting quick pockets of movement both up and down. And if you're nimble and you're well educated on where and why you should be positioning yourself, there is opportunity for cash flow type of trades. Let's take a look at some stocks here. Let's start off with our really our benchmark leader, and that's Apple. Apple earnings earlier in the week on Tuesday, missing in their quarterly report, and the stock taking a mild haircut. About a 5% move. Down. Yesterday we saw a little bit of follow through to that earnings trade. There is room to go lower here. I do caution that on the hourly chart, for those of you that are more inclined to trade this stock on a shorter time period, you can see our averages just riding down. The same way we rode up here and the stock held the averages and made a fairly substantial price move. The reverse has happened. We had that big earnings drop pre-market, a little bit of a snapback into a declining ADMA, where we can see now it's just riding below. And we do anticipate this to go lower. There are some unfilled gaps. You look to the left. There is room here to go lower, possibly back to test major support down here, even around 360. So keep an eye on that, as I think Apple's really a great benchmark. If you're not going to trade the stock, it is sort of the darling of Techland, and it is a definite market mover. So when you see Apple breaking down, or breaking out, it is sort of a sign of what is potentially happening in a broader market. So it's not necessarily a vehicle that you may want to trade, but it is a good proxy for what's happening in Techland and the Nasdaq. IBM, another benchmark stock, very similar looking. This is the hourly chart. So a little bit of crack here in the armor. Earnings report, the stock took a little bit of a haircut overnight. Now just starting to consolidate in this lower range. So I would keep an eye on IBM. If it breaks, this 3-day range that it's been in, which is right around 176, I believe, these lows, we could see back to the lower 170 area down here rather quickly. So keep an eye on IBM. Again, another proxy for the market. You really wanted to see these earnings probably try and get bought. A little bit of a haircut, maybe some buyers step in and try and take us higher. Not really happening here. Let's take a look at the daily. You can see that 3-day consolidation here off of these new highs, earnings, not well received. So a couple benchmark stocks here that I just want to point out. We do have still a lot of stocks that have yet to report earnings. I know Amazon, another big tech stock that is yet to report. Amazon, taking a little bit of a haircut this week as well. I think you got to watch the price action over the next couple of days to see if this is an area that gets bought or we potentially go lower. You have to be very careful. I'm noticing a lot of stocks that are going into new highs and then reporting and then, taking haircuts. So, the earnings news could be priced in here as the market has, made a nice little move for a lot of these stocks into their earnings. Let's take a look at something else. This is GMCR, and this is, a news-driven stock. The stock, had basically sold off, bear flagged in here. We talked about this bear flag. I know Scott did over a week and a half period into these declining averages. Started to break down. The Einhorn news came out, and you can see how that just exponentially increased the price movement to the downside. GMCR found a little bit of a bottoming tail yesterday. Could be good for a little bit of a snapback into prior support down here. I think the stock could be good for a trade back into the mid 70 range for the short-term traders. If you're so inclined, you could probably look to take an entry somewhere into this bottoming tail, about 50%. That's right around 68 bucks. I'd say somewhere in the mid to higher 68s is probably a good entry with a stop here against this low for one of these cash flow, short-term snapback trades. So, a couple of different ideas there. We are still in a very volatile market, very intraday driven by headlines coming out of Europe every single day. Like I said, if we go back to the S&Ps, we had our move. Now we are in a period of consolidation, stuck between, what is a bullish moving average moving higher and a rock. That rock being resistance up here at that 200 EMA. So sort of stuck between a rock and a hard place, and I think a little more time it's probably going to take to resolve this situation. Is this a trade that goes higher, or does the market continue its frenzied action and reverse its course once again? And again, I don't think that we need to necessarily make that, we don't need to know that today. Let the market tell us so we can position ourselves accordingly. You don't need to be the first one into a trade to make money in that trade. Remember that. As always, have a great day trading. There's an abbreviated Friday morning call, and I will talk to you on the VTF shortly. Have a great day, everybody.